Good morning to all of you. Today we're going to be talking about exchange traded funds or ETFs for short. So what is an ETF? Basically, you can consider it to be an investing tool covering diverse range of investments with common similarity, and there is no minimum investment required. Now let me, if you were, did you understand the thing? If you didn't, let me show it. So, okay, this, let's say this is an ETF. This is an ETF, and then there are different kinds of investments inside it. So basic, and you can invest how much ever you want, and these investments have a common similarity. Common, yeah, I'm not gonna write the full thing. So now I'm pretty sure you understand. Basically, you invest into an ETF, and this ETF invests into multiple things with a common multiple investments with a common similarity. Now there are different kinds of ETFs. The first one is index. Okay. Now here is how oh well here's how an index ETF looks like. So here we have an ETF index. So this, let's just say this is an index. And first let's talk about what is an index for those who don't know. Basically, index is a set of well performing companies, kind of, in a specific stock market or a stock exchange. A set of well performing companies composed of an index. For example, you have Nifty 50, you have S&P 500, etc., etc. So, in an index can look like, basically, an index ETF. There is no one actively managing it. This ETF, it just invests your money into the index. It follows the index instead of being constantly researched. So you put money in the ETF. You put money in the ETF, and there goes it goes it go the money goes straight to the index. ETF. Yeah, here's the ETF. You put your money here, it invests it straight into the ETF index. Now, apart from index, you have actively managed. Now, these ETFs, there is a manager it is run by a specific manager. This ETF, this is made as a factory. This ETF is being run by an active personnel, an active manager who does continuous research on it. He basically continuously researches as to what are the good stocks instead of just following an index. And that's why that's why actively managed ETFs. First of all, they're more expensive, and they can also be more risky. Now let's move on to thematic. Now thematic ETFs, it basically, yeah, ETF. So yeah, we have the thematic ETF. Um, Basically, it finds what's trending, like what is the most trending company, like it just follows an industry that is extremely active. So it invests. Suppose things like, we'll take artificial intelligence. We can also take crypto. We can take EVs. space. What else we can think of? AI, crypto, EV space. Maybe we can also think of. First, let's consider these. So, crypto. Actually, crypto is pretty old. What we mean to say is. So this ETF, it invests in each of these trending sectors, or one ETF could be once for one specific trending sector, like it could be investing in AI, different things involving AI, different things involving EVs, like stuff like you companies who work on AI, EVs, and all that. They can also do for space, and the metaverse. Like for AI, they could be investing in stuff like the FANG companies, and for the metaverse, they could be investing in Meta and companies which basically involved with experiences, digital experiences. Now we have bond. Now again, let's make another one. No, this time let's make it a bit more better. This is a bond. This is a bond ETF. So here we have this ETF, as the name suggests, it mostly invests in bonds, like stuff like government bonds, this and that. Yeah. So you put how much ever money, and the ETF will use it by investing in bonds of companies and governments. And second last, we have commodity. Basically the same thing, except this one does for a commodity. It basically invests in commodities like stuff like gold, silver, etc. Different precious metals, oil, etc. And currency. So currency basically invests in currencies for the sake of doing forex. For the sake of doing forex trading. Now this might kind of be thematic, but we have one last category. This is one of the best ones that you can think of if you have extreme confidence on a specific industry, and that is sector. So these ETFs, yeah, this is pretend. So these ETFs, they are assigned a specific sector to invest in. For example, let's pick hospitality. So they will be, if they're investing, if this is a hospitality based ETF, they will be investing in some of the best hotels, resorts, etc. So basically everything to do with that industry, put your money inside this kind of ETF, and as it is, it'll invest in that specific industry for you. All right, so that's all about ETFs. Thank you. I hope you learned something new.